Hello everyone, welcome into the NinjaTrader webinar room. Before we get started with today's presentation, I would like to take a moment to test for picture and sound. So if you can hear my voice, and if you can see the Pure Financial Academy presentation on the screen, type the letter Y into the room. And it looks like I'm already getting some confirmations. Thank you all for confirming that. I'm coming in loud and clear. And thank you all for taking your time out of your schedule and joining the event today. My name is Ryan Lai, and I work in the NinjaTrader business development team here in our Denver, Colorado office. Today we have a very special event with Will Busby of the Pure Financial Academy. Before we move forward with this presentation, I did want to take a moment to show you a disclosure slide here and ask you all a few questions. The question I want to ask is, are you currently using NinjaTrader? So I'll go ahead and put a poll into the room, and this will help me get a gauge of the type of users in attendance, and it also give me an opportunity to read this disclosure. So I'd like to mention that it is important to understand that there are substantial risks in trading commodity futures contracts, and you should carefully consider whether such trading is going to be suitable for you, and this will depend on your specific circumstances and financial resources. It is possible to lose all of the funds that you deposit with your broker, and you can even incur losses beyond these amounts. If you do have any questions, you can always inquire to our risk disclosures document at the link I posted in the room for more information. You can also get a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor a recommendation for any services, but they're simply educational in nature. And this presentation here is being presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. If you have any sort of brokerage-related questions, you can email them directly to brokerage-sales@ninjatrader.com. We also have a phone number, which is 312-262-1289, and you can reach the brokerage directly that way. All right, and it looks like everybody had a chance to fill out the poll. It looks like in the lead, we have lifetime license key holders, followed by free license key users. So it's great to see a good mix of NinjaTrader users in attendance. If there are people in the room that are curious about downloading NinjaTrader, you can download a copy for free at the following link. And if any of you are curious or interested about purchasing or leasing a live license key for NinjaTrader, please take a look at our purchase page here. All right, so with that being said, we are very excited for this unique event today in which Will Busby will show you how supply and demand zones plus volume analysis software can assist in developing a methodical rule-based trading plan. And so I wanted to thank you all again for your attendance today, and without further ado, it is my pleasure to welcome into the NinjaTrader webinar room, Will Busby. Go ahead and take it away, Will.
Hey, Ryan, thanks a lot, man. I really appreciate the introduction. Okay, great. I was going to mention the poll still up there. Thank you for that. As I said, thank you for the introduction. I really do appreciate that. Also, thanks, guys. I know that you're all probably done for the day. Markets are done, and so probably ready to get home if you're not already there. That being said, I do appreciate your time, and I'll try to make it worth your while. This is, as he mentioned, for educational purposes only. Of course, you can see there on the bottom being educational purposes only, but without that obvious statement, this is also for informational purposes to essentially try to get as much information out to you guys as I can in a short period of time. I'll do my best to make it as specific as possible. I know sometimes the events can go all over the board, so I'm going to try not to do that. Do bear with me on my voice. It may not be as strong as normal, but I am going to work through this. So today, guys, we're going to go ahead and get started. Let me see if I can get my screen all set up there. So the first thing that I would like to do is going to kind of help me get through the event a little bit better. I want to have kind of an understanding of how many people in the room perhaps don't have a quality understanding of supply and demand trading. I'm sure probably most of you do, but I just want to find out how many of you don't so that I'll know how much time to spend directly on that. Otherwise, we'll move a little bit quicker through the beginning slides. And of course, I am going to absolutely get out to the live charts. I think that's just imperative for the most part. But yeah, if you will, just type into there you go, guys. So some of you, okay, so And yeah, just type in no or in or something if you're not familiar with supply and demand trading in general. Okay, yeah, so, okay, so there's several of you that don't, a lot of you that do. Canuya, I'll let Ryan touch on that, but I'm quite sure. Okay, cool. All right, so there's a lot of you then. Okay, a little bit more than I expected. So let's do this, guys. Let's walk through the beginning stages of the slides. Let's do this. Let's go ahead and get started. If you guys will, hold your questions until, well, you don't have to hold your questions necessarily, but I will get to them towards the end of the event, and I apologize if I'm not trying to skip over them right now. I just want to make sure that I get through this in a timely manner. I promise you I will come back to the questions. Okay, so let's go ahead and get started. We'll jump right in, and then we'll literally go out to the live charts, in which case you can see it in real time. And I mean, not that we're moving fast right now during market close, but we'll give it a go. All right, so that being said, I want to talk about the zone suite today, but before we do that, supply and demand, guys, it's just referencing, or it's verbiage, terminology, etc. And this is just this very basic. I will tell you that I'm going to try to move a little bit faster through stuff like this, only because if you go out to our YouTube channel, for example, you'll see that this particular slide has been in some of our presentations and so on. I'm going to cover it, but I just want to move a little bit faster. So supply and demand is an economic model of price determination in a model, in a market. It concludes that in a competitive market, price is going to function to equalize the quantity of demanded by the consumers and the quantity supplied by the producers. Okay? So, guys, that doesn't even reference the financial markets, right? I mean, that's just literal supply and demand. So let's kind of keep it that simple from the beginning. I'm going to summarize this slide to suffice to say that when the sellers exceed the buyers, price will decline, right? When the buyers exceed the sellers, price will rally. And so as we are all maybe perhaps hearing this in the terminology for the first time or the 30th, that is what we are referencing, and typically most everyone knows when there's more buyers, we go higher and vice versa. So not too much time needing to be spent there. The equation, so this is kind of where we get into supply and demand imbalances, or the equation as we have defined it here. So the first thing we wanted to discuss is that any transaction, and let's say that by transaction, again, specificity is rather key here, but let's say that you want to buy the futures or Forex or equities or whatever it is. So in order for you to buy that, there must be someone willing to sell it to you. Otherwise, you have no one to buy it from. So what we're saying here is a transaction must consist of both the buyer and the seller. Otherwise, again, it's impossible for that to exist if you have no one to buy from or sell to. So whoever holds the remaining out of those, let's say that the seller, okay, well, in this case, we start with the buyer, but let's say in this scenario, there's two buyers and one seller. Of course, we would anticipate that price would therefore move higher. The opposite is if there are more sellers than buyers, then price would decline, as we mentioned previously. So it's just a very simple, very basic equation there. More buyers, we go higher. More sellers, we go lower. But this is not really diving or delving into the methodology, so to speak, so I'm trying to move a little bit faster through this. Three types of traders, guys, that we reference, and this is just pretty much industry standard stuff. Retail, commercial, and institutional traders. So the retail traders are the individuals like perhaps yourself and myself and many, many others. I like the terminology of home gamers. I believe Jim Cramer coined that phrase. At least that's where I got it from. But yeah, so home gamers, always liked it when he said that, and I was like, okay, well, that's great. That basically references the retail traders around the world. The next is going to be the commercial. So if we ever reference commercial traders or something to that nature, we're referring to corporate entities like your pension fund managers and so on. And then finally, there's the institutions. So your banks, investment firms, your Goldman Sachs of the world, your Bank of Americas, and so on. So in our opinion, the institutional traders are the ones who control the markets. And let me backtrack. Let me actually recant that statement. What I want to say is not the institutional traders, but the institutions themselves. And the reason that I say it like that is because, I don't know how much we all know about trade desks and so on and so forth, but, these large institutions, typically they'll have levels of traders, and some are managing money for, their their customers and clients, and then some are literally managing the company's money, right? So more so what we're referring to are the literal institutions, not the guys managing money for other individuals. Okay? So this is just a statement that we're making here, and it's not, you know, it's not to say that it's true, right? But it's just an opinion, and we all have those, and we're entitled to them. But it's important, and perhaps we should word it differently, but we would say it's very important to be able to locate the institutional buying and selling on any given price chart. And the reason for that is no matter what methodology you use, no matter what strategy, it does not matter. There is not a single one out there that wouldn't benefit from having this information. Let me give you an example. A hypothetical is you use a moving average crossover to buy. Okay, well, probably most of us are familiar with that. If not, that's okay. I'm simply saying a very basic entry strategy. When this occurs, I buy the market. Okay, so in that case, keeping it that simple, that's great, but probably you've noticed that you get stopped out, you know, quite a bit, right? Or your win-to-lose ratio is not as high as you'd like it to be, and so on and so forth. So if you had the ability to say, you know, define where the potential institutions are buying or selling, now you've increased your probability, because instead of buying every time you get that moving average crossover, you can simply wait until it gets to that location and then buy your moving average crossover. So it has its advantages. It's not just for solely trading the zones, albeit that's what we do, but you know, again, it can be advantageous for any trading strategy in our strong opinion. Okay, so let's keep going, guys, and once I get up to the charts, we'll kind of look at some more about order flow, which I know you guys are wanting to know about, and you know, a lot of things like that. Okay, well, actual supply and demand, what is it, and so on. So here we're looking at supply on the left, demand on the right. So supply, as we mentioned before, is a representation of sellers, whereas demand is a representation of buyers. So if we ask ourselves the question, who is selling here? Okay, the answer would be the institutions, and then the next question will be, well, how do we know that? And the answer to that is, well, we don't. In truth, we never really know if it's the institutions who place the order, or you know, it could have been Warren Buffett for all that matter. I don't really know. But at the end of the day, if we have the belief that the institutions are the ones that control the market, and I absolutely believe that, but if that is the case, then who else can create entire market turning points? So the problem with the retail traders doing that is, even combined, we don't have enough money and all agree at the same time, right? So that would literally mean that we would all need to pool our money together, and not only do that to have a lot of money, but then we would have to make the same decision and agree on it. As we know, that can be difficult, right? It's very difficult to agree on things, especially when you're dealing with money. But the institutions, they're not millions of retail traders. They're individual entities. So when an institution already has all of that money, they come in with one decision. They don't have to worry about John over here agreeing with them, or you know, it just doesn't matter. They're making one decision, and they do have the money to actually turn the market. So that's why we say that the institutions are the ones to keep an eye on. Now the next question we want to ask ourselves, we ask who is selling from the top. We also want to know who's selling from the bottom, right? So after we see that strong decline in price, who is it that's jumping in and selling, right? We would say terminology such as chasing the trend, things to that nature, okay? So the answer there is the beginners. Typically, your beginners are going to fall into the retail category, unless, for example, they've gone to work for the institutions or something like that. But beginners are your common trader who is going to chase a trend after it is already underway, okay? Now, unless they have a strategy for doing exactly that, obviously. So there's always exceptions to every rule. But typically the beginner is going to be the one that waits for a major decline to take place, and then they're going to make their decision after the fact. Okay? It's unfortunate, but it just is what it is. And even the absolute professionals, I mean, it happens to everyone. It's not like we can say that's never going to happen to any of us. I mean, it always will. We don't always get it from the beginning and so on. So it will happen, but at the end of the day, we certainly don't want to base our decisions on that. Okay? So let's ask ourselves the next question. Who's going to be buying? So please remember that this arrow here is pointing to the exact same location at where we just specified that the beginning sellers are taking place, or beginner sellers, I should say. So if the beginner sellers are stepping into the market after the fact, remember what we talked about with that transaction. Remember, there had to be two sides to every transaction. So in this case, who are they selling to? You got to ask yourself that question. And remember the remaining part of the transaction. He who holds the most wins. So what ends up typically happening is the beginners will sell after the fact, but what they don't realize is that they're selling right into the hands of the institutions. So that's who is buying from them. Now we would ask ourselves the same question, but I'm sure we already know the answer to this. So who's buying after the trend to the upside? Of course, that would also be the beginners. Typically, those guys would be buying right into the hands of the institutional sellers. Okay? So it's that transaction, guys. I've just seen it so many times over the years, and it causes so many emotions and frustrations and so on and so forth. But it is what it is, and just like we saw, I'll give you guys a little bit of information when we get onto the live charts. I'll show you what we discussed today in the room and things like that. But we literally left the room with one scenario. That we were looking for. We did the same thing yesterday. As a matter of fact, I'll point both of them out. So there are lots of different types of traders. There's some who are looking for everything they can get. It's like they want to pull every apple off of the tree. And then there's some that want to pull only the ripe apples, right? They want to wait for the high probability, larger reward scenarios. So, not a wrong nor a right, guys, right? Let's move forward, keep going real quick. So what we can do here with a rectangle is define those areas. Okay, so a zone, obviously most of you have probably heard of supply and demand zones. So for those of you who were typing in no at the very beginning, what we're going to be looking at today is zone theory, okay, and we're going to be using a zone or a rectangle as a graphical representation of where we anticipate market turning points to take place. Now, it's very important that we understand that as we are going through this stuff, that's not to say that we're talking about a complete reversal every zone you see. Okay? That's absolutely not the case. It's just where high probability market turning points are likely to occur. And not only turning points, but pullbacks. Okay? So let's get out to the charts before we get too far into that so it makes sense visually. But all we're saying here is we can give it a graphical representation by simply using a rectangle. You could also use two lines, two rays. NinjaTrader has great draw tools to use, so we can certainly utilize those. Now this is, just so you guys know, let me back up here. Okay, I want you to focus in. I don't know if you can see my mouse, but focus in on this picture because what you're looking at here is actually the exact same picture. We just split it in two, and then we, of course, but basically down here at the very low, that absolute low, that's the low that you're looking at on the previous slide. Okay, we just split it in two, and then also we incorporated the rest of the chart, obviously. Okay, so by using those rectangles, as you can see here, we've defined where the large quantity of selling has taken place historically. So we can use that information for future purposes. All right? So this is where we are going to locate our high probability, low risk entries, and of course we're looking for high reward. So the same thing to the buyers, right? We've literally defined with a rectangle the area in which we know a fact loads of buyers took place. And how do we know that? Well, because we rallied from there exponentially. Okay? So the only way to do that, as we know with the transaction, is to have more of the buyers than there were the sellers. And how far you go tells you how many, not exactly, not a raw number, but it tells you how many more buyers there were or how many sellers there were, right? Okay, so the equation, the imbalance, that's what we're talking about. All right, so the stronger the move away and the further it goes, that tells you that the much further out of balance price was when it was there. Okay, or the equation, if you will, going back. So there could have been, say, 500,000 to 100,000. I mean, that's way out of balance. Okay? So potentially that means there would be still 400,000 orders there, minus maybe half of those that cancel out and so on. So you're still left with 200,000 orders just sitting there. It's pretty amazing. Okay, so high probability and all that. Guys, this is where we look at something that's so basic and so simple, but it is so true. Okay, so here we're literally calling this the gravitational pull. It's where price gravitates from one pile of order flow to the next. We'll see this on the chart in just a moment. It's a beautiful thing. So what we have here, guys, is literally just piles of orders. Think of them as an influx of order, a basket of orders, if you will. Okay, and what happens is there's an ongoing equation because everyone's going to continue to place trades, right? I mean, otherwise the markets wouldn't exist. So what they do is they go out and they place their limit orders, and those limit orders, the locations in which you have the most of them, all in a small location, that's what this is a representation of, these little bubbles that you see. So what price does is it literally gravitates from one to the next. Now, as you can see here, we've had a pullback, right? So let's just literally start where the line is at now. So since price has pulled back to this area, that was a gravitational pull, right? It pulled price towards it. Well, what then happens is if you think about the magnet effect, the magnet, flip the magnet over, you have a positive negative charge. What happens if you have two of the same, right? Instead of pulling, it pushes, right? So you literally always have this gravitational pull in the market. You have one pile pulling price towards it. You have the other pile pushing price away from it. Depending on how strong or weak they are, this is when we end up with trending versus consolidation or consolidating markets. Okay, so let's move pretty quick through that. Okay, everyone's most likely seen that. That's just your standard trends. Unbelievably, guys, I mean, it is absolutely unbelievable how even in the room today and yesterday, just this week and so on, but it is absolutely unbelievable if you understand this simple part of the equation and combine it with market structure. Okay, that in itself will tell us where those high probability locations are before we even get there. Okay. If there's anyone in the room from our membership, maybe you were in the room today, who knows, you feel free to chime in if you are in the room. I don't know that I see any of you in here, which I don't have the time to take a look through, but that being said, it's very interesting, and when I get out to the charts, I'm sure they'll confirm that for me. It's all recorded. Okay, so locating order flow, guys, on a price chart, very good. We're going to start moving much faster now. Okay, so the formation of buyers, I want you to absolutely paint just paint this picture in your mind, because this picture is definitive. It is one that doesn't fail very often in our experience. Okay, and what I'm saying out of the picture, the large white candle followed by what most would probably call a hammer candle. It's where your tail is much larger than the wick and you have a very small body on that candle. Okay? And then followed by another large white candle. Of course, guys, the white candles, while they're, some people have red and green, we use blue and white. It's just a visual thing that we just like it. Basically, you want to rally up. You want a single candle, just like this one, and then you want to further rally. That is a picture-perfect example of what demand looks like on a price chart. It happens very fast. It moves into, out of very quickly. Okay? So I would definitely map that out, maybe screenshot it or something like that, and just go out and take a look on the price charts, guys. I think you'll come to find that that's a pretty powerful pattern, if you will, in itself. All right. So let's just go ahead and start talking about how we can refine and enhance our order flow analysis. This is where we're going to look at the tool, and then I promise we're going to get right out to it on the charts. Okay, so of course it's the zone suite. The zone suite's a tool, guys. It's designed to reduce the subjectivity and unnecessary emotions, of course. Not to say that we're not going to have them. We all do. Always going to have them, most likely. I would be concerned if I didn't have emotions, right? But the zone suite accounts for price recognition, volume changes, as well as market volatility. It does all of this it's automated, right, on the fly. So it utilizes the information via the algorithms that it's interpreting to display easy-to-follow graphics like the rectangles, the zones, and there's much, much more that we're going to see in just a little bit. Okay, so it can absolutely be implemented into your current strategy, as I mentioned before, confluence measures, if you will. But again, it's just really important, I think, to have an idea of where others anticipate price to have a turning point as well. All right, so let's get right into it. Okay, this is our volume profile. So the volume profile, guys, is, it's obviously, that's probably know what a volume profile is. It's a histogram of sorts. But this is designed to show you where the pungency of order flow has been filled versus where it has not gotten filled. Uh-oh. Whoa. Sorry, guys. I just knocked my mouse over or off my desk there. Sorry about that. Okay, so let's keep moving forward. See if I can zoom in there. So what this is doing, and this is just using visual aesthetics, so your color scheme, if you will. But notice that there's a bright yellow just towards the top, then it goes into a darker color, back to bright, back to darker, and then into a medium color. And very bottom, it's actually completely dark, right? So we use this information, and if I back up, you can actually see that the distance of those are different as well. So notice at the very bottom how the darkest colors are the shortest. So of course we can see the distance that way as well. It makes it easier for us visually. But there's a lot of information that we can get from this. So not only can we go ahead and define the areas, we can literally refine interior of the area. So we can go ahead and say, okay, look, here's the situation. Logically speaking, if I trade what has not happened yet, in other words, we're using a forward-looking approach to anticipate future price movement, right? So therefore, you can't trade what's already occurred. Yeah, but we can use information to where high probability upcoming scenarios are going to take place. Now, what we do when we implement in our methodology is a combination of two things. Old orders, or limit orders, if you will, sitting there on the exchange, and new orders. The new orders are going to be, it could be limit orders, sure, if they place them there, when we get to the location, or it could be market orders. They could get there and then go ahead and place a market order and so on. But what our job is not to care one way or the other. Our job is to try to find locations where that combination is extensive. Okay, we want a lot of both of them, because when we can all agree on something, we move in that direction quite easily and abruptly, if you will. Okay, so right here, notice to the left-hand side, not just the profile, but we have average numbers, and then there's some raw digits over there that you can see as well. Those average numbers are literally giving you raw volume at historical locations. Pretty incredible. We've had to do, I can't even tell you how many, guys, this took a long time. We've had this for many years, but we just kept going along the way and so on. But these numbers are very important to us because it can not only tell us if the zone was strong or weak, it can compare that zone to previous zones as well. And beyond that, we can then look interior to the zone itself, and we can define not just the average of all of the zones, but we can literally see the bid and the ask from this particular zone. Okay? So by having that information, that's how we can compare it to previous zones. Okay. You also notice right here there's a few lines in that zone. Maybe if I zoom in here a little bit, I think you'll be able to see that a little bit better. But basically we have three things. Value, these are acronyms. VAH, value area high. VAL, value area low. And the POC is the point of control. So these are three lines all based on the volume at these locations. So as I told you before, not only can we define the area, we can refine interior of the area. Therefore, we can reduce our risk. That's the goal here, is to reduce our risk. So that way you don't always have to enter at the edge of the zone, right? You can kind of take a microscopic view and see inside of it. That way you go, okay, well look, now I can see a more granular, therefore I don't need to take the entirety of the zone. Maybe I can take half of it, or 3/4 of it. So we'll look at those real time as well. Let's move a little bit faster so we can do that. Here we have the raw volume. I'll zoom in for you there. Just so you know, this is just a simple toggle that we have. You can toggle on the raw numbers, right? So not only can you see all of that, the volume profile, but you can literally display the raw number as well at those at each of the bins By bin, I mean each of the square or rectangles interior there. Okay. So again, it's just how do you want to see this? Do you want to utilize the raw numbers? Do you want to just look at the width of the bins? Do you want to, however you want to see it is perfectly fine, but we've given multiple ways to do that there. And I think one of the cool things is that, we've incorporated the raw numbers just because it's very intriguing to see the literal number. It's very, very intriguing, especially to us. Perhaps it is to you as well. So you could do things like, for example, you have footprint charts, things like that. This is kind of like that, but obviously very different. Footprint charts are based on the bar itself or what have you, whereas this is taking information that has already happened and it's displaying it for future purposes. Okay. All right, so let's move on. Here we have our user-controlled volume analysis. So remember those zones that you were just looking at, those are automated. Those are drawn for you. But we also have our, what was previously called our power zone, and you can define any area of the chart with this. Okay? This is nothing new. Again, we've had all this for years, but some of you, this is the first time you're seeing it. So with that being said, the great thing about this is you can define, say, a trend, right? You can not only just define the areas, but you can go ahead and see where the point of control value areas are for, again, a whole trend, or it could be multiple trends, right? You could want to see all of the data, but it doesn't matter. It's user specified, so you can see anything you want. Could be a swing, a trend, or all of the data in itself. Okay. All right. Our altitude grid, guys. I think if it's okay with you, I'll move a little bit faster. So we're about 4:45 here. We're doing okay on time. Yeah. I think we'll have plenty of time to get out to the live charts and answer the questions. So I'm going to speed through this a little bit faster because this is just different functionality of the software, which I'll show you on the live charts anyway. Okay. So this is our altitude grid. It's a perceived value. Think about it that way. It's literally saying, hey, look, are we buying low and selling high, or are we diddling in the middle? So this is kind of rather a gauge, if you will, to help us see that visually. As you can see here, when we get up into that red area, that's a bad area to be buying in our opinion. So it does display that, and when you come into the red area, it's saying that you're very high on the altitude. The altitude could be maybe like the equity curve to some of you. You've probably heard that terminology. But we use, always have, my terminology would be altitude because I think of altitude as being very different from equity curve. I think it can, we can apply it to many more things. So that's why. Okay? All right, more functionality. We've defined the market structure for you. We determined a long time ago, guys, that there's some very subjective matters in the market and in people's analysis. So with our members, we wanted to do a lot of the things in an automatic fashion. That way it's not subjective, right? You can't second guess it because this is what it is, and it's drawn on your chart. So that's why we did this, to be more methodical, to be more consistent, and therefore reducing those emotions by reducing decision making. Okay? So all of that is automated. It is a simple toggle on and off. Another thing is the trend lines. Very crucial here because trend lines are one of the most subjective things that exist, I believe, today. And I'll show you those are on our charts as well. So we can toggle those on or off as well. In pretty much anything, we can literally toggle on or off. Okay? Fibonacci extension or retracement zones. This is really, this is basically just an enhancement to the NinjaTrader or any platform's Fibonacci retracement tool. It kind of does the same thing, but just a lot more to it. So you can color code different percentage ratios with a zone. You can also change the value from a percentage to a label. You can do little things like that. But at the end of the day, it's essentially defining ratios based on whatever you've provided to it. So if you want to see 38.2 to 61.8% zones, you can literally do that, and you can simply toggle from our user interface. You can toggle off all of the other zones and literally just see that one. Again, just a more enhanced tool, if you will. Okay? Price action trend determination. This is determining the direction of the market. Paint blue in a downtrend, paint white in an uptrend, etc. I'll be direct with you guys. We don't use this in our discretionary trading. The only reason that we implemented this is because we do use it in our fully automated SD model. So we wanted that, you know, we obviously we needed it, we had to have it, so we implemented it as well. So, you know, a lot of people have found that they use this in their discretionary trading. It's okay. We personally don't. But if you're going to implement a systematic approach, it is there absolutely to help you reduce that risk. All right. So we have also this is kind of the same thing here, right? We implemented it for our SD model and to have a fully automated systematic approach, but we don't typically use this in our day-to-day trading. So here we have a trailing stop. There's multiple methods here. We can look at our ATR, which is average true range. We also do have a swing option. All of this is fully automated, right? Now, if you notice there, all of that is custom graphics, so it's not something that you can find. As a matter of fact, we had to literally even define those little discs that you see. Those are all custom done there. Okay, so the next thing I want to look at is the trade details box. Let's go ahead and zoom in a little bit. So as I told you guys, we implemented those things so that we could have a systematic approach, all right? Because we do have a systematic approach, thereby we can print all of that information in a grid for ourselves. That's also a custom graphic that you're looking at there. That's our data box. So we can pop that up directly from the chart and literally look at it anytime. It will stay on top of your charts. It will not go behind. So that in itself is our entire trade plan, all in one single box. Okay, and that's user defined, so we can alter our risk. Maybe someone has a 20 tick risk tolerance, maybe someone has well, maybe not 5, but maybe a 10 tick or something like that, right, depending on your time frames and all of that. But you can definitely generate an entire trade plan just using the zone suite, and it will absolutely print that for you in our data box. Now the next thing about our data box is our real-time information. So what you're looking at there is bid and ask data, and it works like a barometer, right? So obviously now it's saying 0 and there's, you know, full green and full red. But what you're going to see in real time is it's bouncing up and down. Okay, so again, it's like a barometer, whereas it's going to show you the influx of order flow either to the buy side or the sell side. So one of the great things about this is we can wait to get to our locations, and then we can literally use this to see the shift of momentum taking place. Okay? So that's what we would be using that for. Okay, so this is our UI, just user interface, the acronym there. It's a drop-down menu, guys, pretty straightforward, sub-menus of the menus, and you can hover your mouse over any of these and click. As I mentioned, there are lots of toggles here. Guys, our software has been around for a long time, and it is, I don't know how else to say it, it's just very extensive. Even sometimes my own self, which I developed every single part of it, I even have to take a step back and go, wow, you know, there's a lot going on here. But all of it, for the most part, is in the drop-down menu, and you can accomplish most anything you need to do from there. Okay? Now, in that user interface, we also define this as our user interface because it also has to do with user functionality. You can click any zone and notice those buttons there. So those buttons are each going to have its own functionality. So if I click one of those buttons, it's going to do something. Okay? So that's just user friendly. We don't want to have to do things all the time, use the drop-down menu, especially go into our settings, you know, things like that. We want to be able to do things quickly and efficiently. So what we can do is click on any zone at any time and get any of this information that we need. Just in case you're wondering, you know, these labels here are for extending a zone, deleting, volume profile, extending, and unextending, of course, value area, point of control, value ratio, trend following targets, and counter trend targets. All right, and what we're showing you here basically is that not only do our automatic zones have that capability, but also the manual zones do as well. And those are the buttons that you'll see on the zone. Okay. All right, guys, cool. So I won't spend too much time here, but what I would encourage you guys to do before I go ahead and get us all out to the charts, I would I can come back to this, I suppose, but I would encourage you to go ahead and click that green button there. I think you can click that from your end. Just click Start My Demo. Now, the only reason I'm asking you to do this is because you'll have the page up in the event that I don't have time to come back to this slide. So this is nothing to purchase, you know, it's nothing like that. It's obviously a demo of the software if you want it. And if you look to your left-hand side right there, there's a discount code. Okay, so that discount code is obviously, you know, for a discount, right? So you can get 20% off if you decide to purchase the Zone Suite. But I was just saying, go ahead and grab this information while I have it here, and I'll do my best to come back to it. Okay, all right, and then another thing, guys, if you click that Start My Demo and it brings up the that particular page, you can literally just go to our home page, and I would encourage all of you to sign up for our. There's 3 free training videos that you can get, especially for those of you who didn't or not necessarily didn't understand, but didn't have an understanding of supply and demand trading. Absolutely encourage you to go get those 3 free videos. They're free. They're going to literally walk you through multiple steps of supply and demand trading. Okay, so I would encourage you guys to do that. And even the ones who don't, maybe you already have an understanding. The reason I'm asking you to go ahead and get signed up for that is because we will, from time to time, and especially here in the near future, be offering free time in our live room, things like that. So the only way for you to be privy to that information is if you're in our database. Okay. All right, cool. So I'm going to go ahead and get out to the screens. Okay, cool. Hopefully all of you guys are able to see my screens now. As I told you, there was an opportunity that I missed literally coming into the room. I can show you that, which I'll do in a moment. But right now, I just want to maybe focus on the zone. So this is real time, guys. Just seeing it as I'm seeing it, right? I mean, this is exactly what we're doing right now. What I want you guys to see is, well, multiple things. For one, obviously look to the zones. What you can see are the turning points, right? So notice what happens from this high zone value, and then notice what happens down here the moment that we touch this, I mean literally to the tick. So if you can see that top green marker there, okay, so that's our value area high. Matter of fact, if I flicker them on and off, you'll see that, right? You're seeing that gray there too because that's the point of control, which is in this case equivalent to the value area high or the high of the value area. Okay? Now, we're going to use this information to our advantage, all of it, but what we want to do is define these areas first and foremost. Let the software do that for us. And just remember what I said, guys. It's not that we're trying to encourage you to do the exact same thing. I mean, don't get me wrong, we love that, but at the end of the day, it's just about making whatever you desire better. Okay? Could be that moving average crossover. It could be, you know, again, anything. What if, for all intents and purposes, here's a hypothetical for you, but think about this. What if you would have gotten a sell on your strategy right here? What if you would have gotten a buy on your strategy right here? So all you're really doing, if you decide to incorporate that, is simply adding to your confluence measures. Okay, so basically the accuracy of the zones, it's there, it's what it is. But as I told you guys earlier, not only can we define this, we can refine it. So let's look at this top zone here for just a moment. Okay. All right, so we can open that up. And what I want you guys to see here is this and this. It is so, I don't ever want you guys to think that we would ever anticipate this as far as being that accurate. While it is that accurate time and time again, we would never try to call it to the tick like that. Okay, I'm just trying to be forthright with you. That's not what we do, and in no way am I trying to say that that's what we do, guys. We absolutely wouldn't. In fact, I would go as far to say as I don't want to do that, because if I do that, I run the risk of not getting filled. Okay, so what we do is we utilize the area in itself, and then we find what makes sense. Okay, so typically that's going to be the value area low or the point of control in supply, or the value area high or point of control in demand. Okay, so there you go. So that's what we can do. That's how we're going to use that to refine it, thereby reducing our risk substantially here. Okay. Now again, the same thing to the downside. You can see that when we get to this level below, notice it literally touched that one to the tick as well. Okay. So yeah, is it accurate? It's absolutely accurate, but I think it would be better served for us not to make that opinion, right? Maybe for you to do that. So when we look to things like this, guys, for example, we have this area right in through here, and each and every zone is going to have the same information. But as we can see, what we're doing is instead of entering way down here, granted this is not a lot, I mean you're talking about a 30-minute chart, so this is literally, with a stop above, you're talking about 2 points. So it's 8 ticks. It's not a lot, but at the end of the day, why risk 8 if you could risk 6, right, or 5 even? So that's what we're using this for. In this here, as I said, you can see all of the information. You can see the raw. Let's do this. We can turn on all of this information directly from the zone if we choose to. Okay? We can show trend following targets. We can show counter trend targets. So we can do all of this directly from the zone in itself, or I can, of course, do it from my drop-down menu, and I can accomplish all of them at the same time. Do I want to do that? Well, it just depends. Right? There's always a reason, I suppose. Right? So here, what I want to do is turn off my volume profile. Notice how they all went away at one time. So I can control all of them or one of them, just depending on how you want to do that. So next I'll look at this zone here, and I can give you a couple of examples of how we go about reading the structure in accordance with. But this zone right here, guys, I was actually watching this one after the fact. I wasn't here in real time, but I was kind of watching it after the fact as it touched it, and it came back up to touch it yet again. Now with this area, when we drop away from it, let me do it like this. There we go. Okay, so again, what I'm trying to show you here is that we can use this to our advantage. Okay. There we go. So notice what's happening there. On your retest of this level, we touch those literally to the tick. Okay, so I don't want to be the seller down at the low. I want to reduce my risk so that I can have a much greater reward. That puts your risk to reward ratio much, much, much greater, because you can still have the same target, but you're reducing your entry substantially. Okay, so this is that. We're coming back to this zone. We've tested it multiple times now, and we're simply coming back to it yet again. Okay. There's not much to show you guys, honestly. I mean, I had one, well, it's just there. So this is the only trade, that I had that I was able to do. But I'll just kind of walk you through these. So what we were doing, guys, just to be forthright with you, as we always are, but in the room this morning. So we walked through some simulated trading opportunities, and then we literally pinpointed what we would actually do. Okay, so that's what we try to do, is walk through simulated scenarios so that we can practice, right? I mean, I don't know any other word to really say it. So as we discussed that in the room, it's literally practice. You have to practice where to put your targets, how to enter, how to do it without emotions. You kind of make it methodical, if you will. So that's what we were doing this morning, and as we left the room, we had one thing that we were looking for, and I'll go explain that as well. But anyway, that's all I have for you guys right there. Sorry. The S&P one, let's go take a look at that, and I'll show you what I tried to catch literally as we were coming into the room. Was this one right here. Yeah, so I couldn't though. As you can see, I missed it. So it hit it to the tick right there, and I missed it. As a matter of fact, I was communicating with Ryan at that time when I was trying to get things set up. So yeah, I missed that. But you can also see some of these other zones as well. How this particular zone was telling you, don't enter down here. There's a lot to be said about this information. Same with this one here. This one has not been tested yet, right? So we're looking around that 99 quarter where anticipatory support will be found. Okay. All right. So let's dive into real quick. I'll take it down. Make sure I don't have too much. Oh, we're good. Okay. So you guys can see the load time and efficiencies there. But what I'll show you here, guys, is that we left the room this morning. Okay? We left the room this morning with one thing in mind. We wanted to be the buyer, but most especially, We wanted to be the buyer down here. That's the most important part, because as we were running through those simulated opportunities, we were explaining that while this is a pattern, this is a tradable pattern, if you will, and some people are going to trade every one of them. As far as being high probability, that's what's more important to us, right? And that's what we prefer to do. So, for example, we did not want to do anything in through here. This is not, and we said this way in advance. So again, it's all on recording, and I'd be more than happy to put you in touch with our members if you desire that. But that being said, we knew from the very beginning that this is all we wanted to do, just buy down here. There were specific price patterns that we look for in order to confirm that, but the location is the most important part. So what do you guys think I would see if, I don't know, if I threw a moving average crossover on here or whatever you use, right? But do you think I'd probably find one down there? Yeah, sure. Okay, so it just depends on whatever your strategy is, but we can define that and we can refine that super accurate, if you will. So let's look at something in real time, for example. I just flipped to this chart, okay, so you guys can see it as it is. Okay. So there you go. That's real time. And what it's doing is it's literally just saying, hey, where's the highest probability for buyers to take place? Again, guys, oh boy, I just realized this. Let me show you. Remember what I told you guys just a little while ago? Do you see that right there? You guys remember what I told you? I said to map or paint this in your mind, I think is what I said. Okay? But that's your classic, that's classic demand right there. Okay? That was it. I just wanted to show you guys that as it's all happening in real time. Okay? So do we expect great large moves away from these things? No, of course not. We would want to be with the direction of the market, trend following and all of that. So we'd need to make sure. So to answer your question, or my question rather, as I asked it, would be in this particular area, were we looking to hold it? Yes, absolutely. And did we say that in advance? Absolutely. Absolutely. Of course. We would never not say it in advance. How are you going to trade it, right? But all of that is in the, was just discussed in the live room today. Okay. I did execute that trade. It was pretty great, actually. Okay, so what I'm going to try to do, I don't have much time, so I'm going to just kind of pause for a moment. I've talked about a lot of things, guys. A couple things that I'll show you right here, for example. There's your the tool, as I mentioned. Okay, so I can move this puppy anywhere I want it to be. I can define just one little area. I can define a whole swing. Anything that I want to do, I can do using that. Our fib zones here, right? Actually, let me show you what I meant by. Okay, so if I wanted to toggle them. Now I'm left with only my 38.2 to 61.8. Okay. So things like that for confluence measures. Let's take some time, guys, before I lose my voice entirely, and address some questions that you guys have. I really wish I would have had more time to address market structure. I will leave you with this. Actually, you know what, guys? There's a video that will absolutely explains that pretty well, I would say. It's a free video. It's a YouTube, so you might want to check out our YouTube channel, but I'm going to try to grab that puppy real quick. Yeah, here we go. Oh, it's making noise over here, so bear with me on that. Okay, here you go, guys. I'm going to pop this in. There you go. So it's just a video for YouTube. If you want to check that out, it's free, of course, but it's exactly what I'm trying to teach you right now. It's supply and demand, market structure, and I think that'd be very advantageous. Okay. Nothing to purchase. There's no sales pitch. It's just a session. All right. So now we're going to grab some questions, and ironically, I'm looking at the bottom, and Quasi. I see your question first. I'm going to go to the top so I can start from there. But Quasi, I don't know if you're being serious with the question or not, but I can, from a humble place, I can tell you that please do not expect that. Okay. So yeah, so for anyone who would actually seriously think that it can happen, guys, it doesn't. It's not like that at all. It is hard work, really hard work, right? But we all know that. All you guys know that. Don't need to say that. Okay, let's see here. Brian, earlier you were talking about supply and demand versus bid and ask. Well, so yeah, absolutely. So let me show you. This is historical bid and ask data, right? So what I mean is bid and ask is only real time. It's just real time buyers and sellers, but you see it happening right then. So the difference is we're incorporating, as I told you guys before, we're looking for a combination, right? But we're incorporating where those historical imbalances have taken place so that we can use them for future reference. And also that our trade data box, remember it does show you the bid and ask real-time data too. Absolutely. So there is no difference really, Brian. I mean, supply and demand is bid and ask data. It's just supply and demand zones or zone theory is where did the massive imbalances take place. So that's what we look for. All right, let's see. Uh-oh, sounds like you guys were having some technical issues. Sorry, I hope that you guys all got that worked out. Oprah, how do you know it has large quantity there? So, you know, obviously by having all of this information, so we pull all of this information from the data, right? So we already have it. So we can calculate based on, again, you can average out the zones, right? We can compare basically, you know, every increment in the market over however specified time, and we can pull out the information that has the most, right? So I could say, you know, out of any of these bars, give me the bar that shows the most buyers or the most sellers. I can do anything of that. So that's what our algorithms do. It pulls it from the data, and then it puts it through a plethora of algorithms, criteria points, and displays what we believe to be the best ones. Excuse me. Sorry about that, guys, about my voice. Oh gosh, John, I'm so sorry. I missed earlier you asked me to go back to a slide. I apologize about that. If you have a question regarding it, let me know, though, okay? Sorry, sorry, Jeremy. I didn't know how to get that pointer to you guys, so sorry about that, guys. Meaning the mouse pointer is what he's referring to. How do you compute the average sell and buy? Well, I'm not going to get into the algorithms, right, if that's what you're looking for, but just as you would expect. I mean, it's just an average, right? So we're literally just computing the average of the zones. Yeah. But yeah, I don't want to dive into the actual algorithms too much. It's just like you'd find an average of anything, though, right? Basically, add them up, multiply, right? You know what I'm saying? Add them up and divide by X, however many it is, and you'll get an average number. Let's see. Carlos, is the zone sweep good for scalping and lower time frames such as the 1 minute and 3 minute? Let's turn all of this off here for just a moment. So I got to move really fast here, guys, because we're about to go over on time. So to answer your question, I believe the answer would be absolutely. You know, but again, you can make that decision. You know, they work exponentially well. I'll show you, for example, on the 1 minute chart. Okay. So there you have it. So you can literally see what has just happened in real time. It turned from this area, went and touched this one, and has already started to turn back to the upside. I wouldn't expect too much of this zone, guys. That's very much diddling in the middle. So in our training, not only do you get the software, but then we teach how to filter out some of the zones. Which ones do we want to trade? Which ones do we not? That type of thing. Absolutely. Okay. TS, the difference between filled versus unfilled. Okay, you literally look at this zone and you'd say, okay, 3,163 got filled here, but only 1,268 did here. Okay, so that's less than half. It's a third. Only 1,268 did here. Okay, so that's less than half. It's a third of it, right? So for that reason, if this is the area and that's where the least of it got filled, that's where I expect to go again. Well, let's go look at what happened. Bam. Just like that. See what I'm saying? Just like that. So this is real-time stuff, guys. I'm just extending it to you. So let's go extend that real quick. And it's easier to see. So right in through that area there, okay, is exactly where you turn. All right, cool. And of course, we go much more in depth, but TS, I'm sorry, I just don't have the time right now. I'm already pushing Ryan. I can feel him over here. Hurry up, Will, hurry up. What's the best? It keeps cutting. Oh, sorry, what time frame? So I really prefer like the 25,000 volume myself, or the 30-minute for my smaller time frame SKT. Absolutely. TS, I have the version 1.2 software. Sorry, I don't quite understand the question, but you touch base with me. I'll be happy to get that any information to you. I just don't quite understand the question. Don't want to keep Ryan over on this. Yeah, Neville. So you can go intra-bar if you want to. Let's go to a. Okay, so things like that, sure. Right. You can go intra-bar if you want to. Yeah. Right. Jack, so yeah, good question, man. Thank you for asking that. I appreciate it. So it would be a simulated account. I don't know if you know how that really works. I'd be happy to have that conversation with you on a personal note, though. In the room, if you're asking me if we do trade live, absolutely. Okay, and we have not only us but our members and stuff share, statements, etc. It's all that good stuff. So yeah, we absolutely do. But you have to be mindful of how the whole industry works as far as what we can and cannot do. We are regulated, just so you know. But again, if you want to have that conversation, let me know, and I'll be more than happy to. I'll be as transparent as I can possibly be with you. Okay, guys, I got to run. I'm sorry. I'm already keeping Ryan over. Guys, I know I missed a lot of questions there at the end. I'm so sorry. My goodness. I really do apologize, but I got to run. I'm going to have to turn it back over. I told you guys I would get. There you go. So I got back over there. If you want to sign up or what have you, I'll be happy to help you guys in any way I can. I hope you enjoyed the presentation. I certainly enjoyed my time with you. God bless you all. Thank you so much. Ryan, turn it back over to you.
All right. Hey, this is Ryan from NinjaTrader, hopping back on. And I'd like to give a special thank you to Will Busby of Pure Financial Academy today for a great presentation. And the NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for all of our clients. So if you find value in these events, we would hope that you would attend them on a regular basis. And we'd like to remind you that the information provided in this presentation was that of Pure Financial Academy and not that of the NinjaTrader Group. So all the information presented was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spent with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at NinjaTrader.